Hello and welcome to AI Market News by LM. Today, we're diving into a massive tech-led sell-off that has sent some serious shockwaves through the global markets. And believe it or not, it was all sparked by a single development in AI. So let's get right to the big headline, shall we? A staggering $285 billion was just wiped from software stocks almost overnight. And the trigger? A single announcement from the world of artificial intelligence. And you could really feel the tremors hitting Wall Street hard. It led to this dramatic shift as investors started fleeing some of the market's biggest and what we thought were safest-seeming tech names. Now, what's really interesting here is just how different the damage was across the board. The tech-heavy NASDAQ, well, it bore the brunt of the selling, falling nearly 1.5%. That's a huge underperformance compared to the rest of the market, and it tells us exactly where the fear was concentrated. So what exactly was the catalyst here? Let's break down the AI disruption that really triggered this whole market move. So the trigger was this new automation tool from the AI startup Anthropic. This thing is aimed at professional services, and the markets immediately saw it as a potential disruptive threat to the core business models of so many established software makers. And this news, well, it raised what market commentators are now calling an existential question for the entire software sector. All of a sudden, it wasn't just about some new competition. It was about the very survival of existing business models in this new age of advanced AI. Okay, so this disruption, it sparked a classic market reaction, a big rotation into value. So let's follow the money and see where all that capital flowed once it took off from the tech sector. We saw a crystal clear shift out of big tech, software, and other growth stocks, and right into value and cyclical sectors. Money just poured into areas like energy and industrials. We saw names like FedEx and Walmart actually see gains, while the chip index just fell hard. And this chart, wow, it just brilliantly illustrates the split. While the mega-cap tech stocks in the NASDAQ 100 were getting absolutely hammered, the small-cap-focused Russell 2000 index, well, it actually ended the day in the green. It really is a tale of two markets right now. Now, this risk-off feeling in tech didn't just stop with stocks. Oh no, it rippled out across the entire global financial landscape. It hit currencies, commodities, and digital assets. Over in the currency markets, the US dollar strengthened as investors looked for a safe haven. The USD/JPY pair climbed pretty significantly, pushing right past that key psychological barrier of 156 as money just flowed into the dollar. Now, at the same time, geopolitical tensions, spurred by some events in the Arabian Sea, pushed crude oil higher. And then you have precious metals, which saw a huge surge. Gold, and especially silver, rebounded sharply from recent lows, as traders just piled back into those classic inflation hedges and safe havens. Meanwhile, the crypto space saw a massive rout. Nearly $500 billion in market cap, just gone, erased in less than a week. Bitcoin tumbled to its lowest level since the 2024 presidential election, which just goes to show that in this risk-off environment, it traded more like a tech stock than digital gold. So, with all this volatility, the big question is, what are the key indicators we should be watching now, to get a sense of where we might go from here? Well, one key tool is the Fear and Greed Index. It's a fantastic way to gauge the raw emotion that's driving the market. A high reading means greed is in the driver's seat, while a low reading, like what we might be seeing now, signals that fear is really taking over. Next up, we're keeping a really close eye on the CME FedWatch tool. This is crucial because it shows us in real time how traders are betting on what the Fed will do next with interest rates. A major shock like this can cause those expectations to change in a heartbeat. And finally, looking at the economic calendar from investing.com, we should pay close attention to key U.S. data, like the ADP employment report and the ISM services PMI. Also on the docket, some crucial inflation numbers coming out of the Eurozone, and those are going to have a big impact on global markets. So all this leaves us with a really provocative thought. Is this just a temporary repricing of risk while the market digests a new threat? Or is the dual nature of AI, as both a creator of immense value and a destroyer of old business models, pushing us into a fundamentally new and much more volatile era for investing? This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.